Good morning, everyone. Welcome to the On Time, On Target Morning Brief on today, Friday, September 18th, 2020. September 18th. Happy birthday, Air Force. Again, used to go into a military ball or an Air Force ball this time of year. Haven't done that in years, though. It was actually kind of a fond memory of the getting dressed up to celebrate the Air Force birthday every year. So, all right, good morning, everybody. We are going to invest with military precision this morning. All the time looking out to make money. If you're catching us on replay, we have a bunch of investors that get together in the morning. We bounce ideas off each other and look to make money in both long-term investing and short-term investing. If you're interested in joining the room, reach out to me for a free trial at steve@ototnow.com, and we will get you all set up so you can join us. All right, the rest of it's a fighter pilot deeper brief this morning. Mission objectives are going to be to grow our money, protect our money, and live off our money. Specific theme of the day is going to be protecting our money through value investing or cyclical investing, if you will. Jim Cramer yesterday came out and said it's time to start putting money back to work, which I was like, holy crap. I thought for sure that was too optimistic. And then he kind of further clarified that he's like in value investing. It's like, well, yeah, I would say it's a little too early to hop right back into your tech names. However, there's, if you want to get into cyclical names, not really my bread and butter, but I do have some of these in the book. But you can get started. So I'll have some recommendations for you. I would tell you personally whether I recommend them or not today, and we'll go over those names here in a minute. The question today is, what is value versus growth investing? I will tell you there are Buffett was a value investor. It has been all growth for over a decade. When I went into the business, threw out my own shingle and said, hey, everybody hop on board, it was basically a growth theme, and it is still a growth theme, even though with a heavy growth theme, you have to take a break sometimes. And, growth names get hit hard when they get hit. So you just have to be able to be up for the ride. All right, our flow for today is long, short, open, short, long. That means we're going to take a look at long-term investing stuff with going around the world, looking at markets. And then we are going to come back to the U.S., look at headline specifics this morning. And then we are going to get into our long-term investing topic. Once we get within 10 minutes of the open, we will switch to day trading. We'll use our specific gap and go strategy, which means we're looking for stocks that have moved 5 to 10%, either up or down, and then we're going to go long or short and take them in the direction of the gap. More on that later, but ideally we're in and out of any trade we have in the first 10 minutes of the day so we can get back to our long-term investing. I will go through the chat room and the question of the day room, clear up any of the stuff that comes up this morning, and then we will move on to the finishing up with long-term investing stuff. For contingencies, if you have any issues out there this morning, go to steve@ototnow.com and we will get those resolved for you. And lastly, disclaimers at the bottom. This is an educational presentation, so do your own diligence before acting on any information you hear in this presentation. All right, let's go up and take a look at the TD Ameritrade Think or Swim platform, which is coming to you right now. And we'll look at the S&P 500. So again, from left to right, this is a year-long chart that we're looking at. We had the big run-up into the highs of February. The big sell-off, 35% in 30 days, historic kind of move down, and then the V-shaped recovery, which has been come into question lately, right? So we do have the AI trend lines that are up here, and then we basically, life was good for several months in a row. What's that, about 5? And then lately run into some issues, okay? So we do have a chance today, if we have a nice big green day, today we could actually finish on the week up, which would be the first up week in a couple weeks here. So we shall see how the week actually ends. But when we take a look at the 5-day, which is this chart, you can see this was Monday morning where we opened. So we're pretty close to it, honestly. It doesn't seem like it. It seems like there's a lot of negativity in the market, but the market is actually showing a lot more strength than I thought it would. So we'll see if we get back up to the 337 level. And that would be, maybe even 0.5% or 1% move up today. So we shall see. As far as earnings out this morning, I'll cover a little bit of those in the brief I have written down for the long and short names that are out there. But TC, I don't even know what that is, was the only one this morning, and then there were a couple last night that registered on Thursday evening there. So here you can see the day trading screen. Again, this is the pre-market action and the SPY. basically trending positive as we go towards the open. All right, I'm going to share out to you the CNBC screen. We're going to go around the world and take a look at some names out there. All right, here are our pre-market. I'm going to refresh this. Maybe we're in the green across the board. Not quite. Dow's still showing red. S&P a little bit in the green, and NASDAQ, again, tech heavy, up half a percent there. Then you go, Dow snaps a 4-day winning streak yesterday. So we'll see what happens today. So around Europe, pretty well down across the board, except for the Germans are up a little bit here. Asia, which is often a precursor of how the U.S. market's going to do, is up across the board, with China up over 2%. So I do think of any of these, the Chinese market is the one that affects us the most. So we'll see if that leads to our being up today. All right, as far as here are the numbers from yesterday, Dow's down half, all the way NASDAQ down over a 1.5%. Volatility has not been up lately. So got a good question yesterday. How can volatility be down if the markets are down? Well, again, volatility, which is, that's VIX, is a statistical measure of options. So that's a no kidding output of, physical numbers. So that's the VIX. The VXX replicates that, but it's a trading instrument. And anytime something trades on an open market, literally the price that you see is the price that the last two idiots on the planet agreed to. So literally, think Tesla for a second. And I have one share of Tesla, and I said I'm going to sell it to Silver in the room here, and say, hey, Silver, I want to sell you my share of Tesla for $5,000. You say, sure, sounds good. I'll put a market order in for one share, and boom, it hits. And there, the spot price instantly is at $5,000. Does that mean the stock is worth $5,000? No, it just means two people on the planet somewhere agreed to that price. That's it. So in the VXX, since it's a trading vehicle, sometimes it will get affected by money flow. Money flow in or out can take it away from its underlying statistical measure. So people that are using the VXX are all aware of what the VIX is on the day. But again, sometimes you just have to, if you want to buy Workhorse, which is a name we're pretty much in across the board, if you're going to buy that name and you need money and you look in the portfolio and you go, well, I'm getting tired of this VXX play because it's not working, then I'm going to sell those shares and put that money to work somewhere else. That's money flow. That's nothing against the VIX or VXX, but that's just showing you that sometimes money rolls out. People sell for all kinds of reasons. So things can affect it more than a direct one-for-one relationship with the VIX. All right, good question, though. All right, off to bonds. Down across the board just a little bit, nothing really concerning there. Oil got over 40 yesterday, which is kind of nice, and then came back in overnight. But again, hanging around that 40 level is pretty good. I like that, except for a 9% weekly gain. Again, that's to get that back up from that 37 level up over 40. And then our precious metals all creeping up in the green, but still gold's well below that $2,000 mark. All right, let's take a look at the headlines around the U.S. All right, TikTok and Trump. Goodness gracious, could we get a little more dramatic about this company? Now, I do agree, and I had TikTok on my phone, so I hope they enjoy all my pictures. But yeah, so he wants to get us away from TikTok. So that is obviously going to, the deadline is Sunday. So that's when you're going to start getting blocked. I don't know physically how they do that. Other than just to say it's illegal, or they can physically block the downloads. I suppose they can go through Play Store and the Apple Store. I don't know. We shall see what happens there. I don't particularly care myself, but I'm sure others will care out there. All right. So we weren't here yesterday. Sorry about that. I had a client that rolled in. The only time they could do anything that day was at 8. So you are going to see over the course of this that we will have days that I won't be here, probably about once a quarter, I would imagine, for whatever reason. So I rolled everybody's extension date one day. So you get compensated for that. So it doesn't count against you. But on Wednesday, we did have the Federal Reserve announcement. We didn't talk about that yesterday. Basically, the biggest thing that came out of that is they're going to try to increase inflation to above 2%, which is weird because they're normally supposed to talk about interest rates and employment. And here we are having the Fed talk about inflation, which is a little different, right? So employment's trending in the correct direction. We're a long way from, the 5% or less, but Fed rate interest rates are already at zero, so there's kind of like no more levers to pull there. So next thing they're focusing on keeping those lower longer so we can get some inflation back, which is to avoid a deflationary environment. I kind of get that, but I think that's going to spook some people when you have the Fed keep talking about increasing inflation, because inflation can be scary, right? If you're in retirement and things inflate on you significantly, and you are not in growth stocks, which a lot of retirees aren't. Again, if you're with me, I still have you maintain a growth presence in retirement for this exact reason. So growth is fine in an inflationary environment because it inflates with it. Value is not, and it kind of gets left for dead. So, and of course, you can't use bonds out there because they don't pay anything anymore. So all the bond talk I did for years, I can't do that anymore. If you have bonds, fantastic. They're paying more than you can get anywhere else. And they're all at a premium right now, and we're not selling them. We're going to sit and hold on them and milk them until they expire. Yeah, I agree, Predator. Good point there in the chat. That's exactly what they're saying, is we want to maintain a little bit of inflation, 2% or higher, to exactly avoid the deflation that happened in Japan and lost decades and things like that. It's kind of an advanced topic, so I don't want to go into it here, and I'm not smart enough on it yet, so I really need to really go deep on exactly what they're talking about there. There's got to be a book out that really gets into this for me to exactly understand everything about that. But yes, a little bit of inflation is good. Okay, here's what we're going to talk about today. Cramer starts buying, so gasp, right? Because I still think, I get asked this every day, I still think the market is lower as a whole on December 31st of 2020 than it is on today, September 18th. I do. I don't see a scenario where the market just goes, I'll ignore all the noise out there and all the drama, and I'm just going to scream higher. Now, I will say that markets tend to do that sometimes, but look at the run we've had from the March 23rd lows. 50% retracement. I mean, or 50% from there. If you got in at the exact bottom, we were a day early. But I mean, still, when you look at that move, you look at 2020, you're in the green almost across the board unless you cashed out. I mean, holy crud. We've had a terrible year, and we're still up pretty big. So I just don't see the market laughing off an entire election and continuing higher. But so when he said start buying, I was like, click, click, click. What is Cramer talking about? And he did go in and say he was going to talk only buy cyclical stocks. Don't buy into tech here. I still think you can focus in on some tech here, but you have to be very surgical with it. So, and we'll get to more of the names he recommended here in a second. Okay, Wednesday also, there were all those IPOs we talked about, kind of crazy. I watched them all that day, and of course, the Snowflake one went up 100% after inflating their asking price all the way up to, ridiculous amounts, and it's been down yesterday. It'll probably be down today. So a lot of motion in IPOs. If you want to, I don't really play that game myself, but if you want to get in on that, we can do that. Just be prepared for things to move. All right, putting cash to work. Again, that was what he's really saying, is cash is really going to be deadly if you keep cash on the sideline. So go in for value so you're not losing money and you're getting generally a 4 to 5% dividend. Again, you cannot find that in bonds anymore. Okay, primarily upgrades going in to some of these companies, and hey, let's just check that out. Military retirement's tied to inflation. So let's see if there's a number coming up here. I lost it. Where was it? How much your Social Security check may increase. I know we have people in the room on Social Security. So let's see. That's announced every October, and it's the CPIW that is exactly measured. All right. 1.6, that was last year's number, so they're projecting, at least according to this article, which you don't make it on CNBC, without being somewhere in the ballpark of 1.3%. So again, that's Social Security and military retirements are both pegged to that. So that would work. Take that. All right, let's leave the headlines and go on into the cyclical stocks that Cramer recommended. Again, the first one I'll talk about is 3M. So 3M is an amazing company. They're still innovating. They still have a bunch of You know, when I was back a million years ago, when I went to Iowa State, as an engineer, you were trying to get on with 3M, and that's still the case, right? They're still a great company, but just because they're kind of old school tech, if you will, they get left behind. They don't produce software that you can replicate, or they don't make iPhones, right? They make household stuff. So that's where, when you look at a company like this, you're going to see numbers that you would like traditionally. You're going to see a 3.41% dividend. People get all excited about dividends. I mean, don't invest for the dividend. I will just, if you're doing that, you're kind of in an investing fallacy, if you will, because when stocks are moving 3% a day, you're waiting a year for that entirety of that dividend. I mean, you're getting it generally quarterly, a chunk of it, but you always want to invest. The investment thesis goes on the company itself. The dividend is just free cheese along the way. Do not let it sway your opinion. Of course, if you get a dividend over 10%, that's just not sustainable. So the stock price is going to go down, even if everything's going well, if something's given off a 10% dividend. So enough on that. PE numbers, again, these are numbers that you would commonly see. That 18 to 21 range is a normal range, normal valuation for a firm. Good news is you're going to have small green numbers. You won't have the big, you're not going to get a home run with a company like this, but you will get a good solid single, especially when the economy's doing well, and hardly any short float against these names because there's just not enough volatility in it to make the shorts, the professional shorts, make it worth their time. And plus, remember, if you go short a stock and you hold it over the dividend payout, guess what? Yeah, you pay the dividend. Yeah, you're short. You sold it. You pay the dividend. So so you owe on that. So a lot of people don't like the big names when it comes to going shorts. So there's the chart. It has not gone back to the 180 level. So Cramer's point, and this was again early 2000. Cramer's point is, if you want to get in here, these names are not, even if tech continues to sell off, these names are going to be fine. You may not make a lot of money, but you will certainly protect your money in this case. All right, let's go over to the big board at Schwab. We'll look at some other names that Cramer recommended, and then we'll get into our day trading stuff. So here you go. Here's the Schwab Street Smart Edge platform that you're looking at. The top four are the ones that Cramer talked about. Bottom left, that's just snow. That happened yesterday, so I had to put up there, so keep an eye on it because it's kind of funny. But the first four names, 3M we've already talked about. Dow Chemical, again, when you look, very similar to 3M, it has not gone back to its early 2020 highs. We go over here, there's Cramer talking right now as to what he thinks every morning. You have Caterpillar. This is another name that I do not like because of the heavy capital intensive. They make big machines. They're not high margin. Their workforce, again, is highly skilled, highly paid American worker. So we're talking, you know, $70 an hour kind of folks. It's just tough to make a lot of money like an Apple does or Amazon does because they aren't paying their workforce that level. But anyhow, big American name. So this one has gone to its new highs. So these are, you know, Cat's another name that benefits from infrastructure bills, that sort of things that come out. Ford is another one that has not gone anywhere near its previous highs, but also suspended its dividends. So there will be a day when Ford issues its dividend again. It will not be the 5% or 8% or whatever it got up to. But they will again reinitiate their dividend and be going back to the races there. So this is value investing. What do I recommend out of this? Only 3M. And only if you're really into value. I still think you're better off in an SPXB, which is the bond instrument I use that pays 3% and only invests in S&P 500 bonds. So again, boring, yawn, but it's not going to lose a ton of money going through an election. So election could have the overall market could sell off 20%. 3M would sell off in that case. It'd probably sell off maybe 5 to 7%, but an SPXB is actually going to hold its value because of money flowing in. So that's the theory anyway. Snow off to the left, you know, it took 100% on double on Wednesday when it opened at noon, and then yesterday it was down, I think, 10%. So that could be a short name that we look at today. Just because of continuation down from going up too much. Then the bottom right is SCHV. Again, that's a name for a value investor. If you don't even want to mess in going into any of these names and picking out an individual stock, you can take the index version, SCHV, and go from there. So, all right, let's go ahead and take a look at our swing to our day trading hats, and let me find my, that's the gapping up one. No gaps down there. Let me find my headline here. Gapping up, down, that's what I'm looking for. All right, we'll process that while that's on the screen. Again, you have to be on a big screen to see it. I found 7 long names that fit our 5 to 10% up and no short names. So we'll be on the lookout for some short names. You know, I prefer to go short, even though our last one on Wednesday went long. So, all right, have play, Dave and Buster's. Let's go in here and dig this out. Upgrade on an upgrade. Basically, they thought yesterday Dave and Buster's was down and on the brink of bankruptcy, so we'll take a look at that here in a second. But now it gets an upgrade today. BGNE, I don't have that on my list, so plus 6%. That's on a cancer trial. I have two cancer-related stocks this morning. One other one's AGEN. Right, play IVI. Let's look on the downside. Stock offering. Stock offering. Oh, new. I don't like those as much, but we'll check them out. So really nothing meeting that 5% down. There's beyond at 4% down. Do a downgrade. All right, so we'll take a look at that on our mains, or excuse me, on our secondary screen here. So the first one is Dave & Buster's Long, PLAY. I was in the stock for a long time, gave up on it years ago, and then it crashed. So here's where it was, down to 11. This is back in, this is July, all the way up to 20 and, or not, almost 20 there, and then on its way down. So, and it just got an upgrade. Let's look at the numbers, 14 up to 15. So it does have plenty of room to move higher, but I don't think they're open right now at all. Maybe they're open partially. Stock had tumbled 26% in previous session. So that's this move down from 17 to 1350. And then they upgraded it. So yeah, it can move back up into 16. So we'll take a look at that long. All right, TGB, another name. 50% still closed. I assume Predator, that's for play. $1.20, $1.25. Not going to play that game this morning. Too low on the price. Vale, which again, Brazilian energy company. No news. It's up 6%. Not going to get into that. MARK. Remark Holdings down at the dollar level. Not going to get into that. AGEN. This is AGEN is a cancer name. So 519 to 520. It has the volume. Would be off to new highs coming up from $3. We can keep an eye on that. ABEO. I do like this move up. It's out of the dollar range. Man, it is really sold off hard. You can get in there with about a 5-cent stop. I'm not going to do it. NNOX, this is a name we've been in and out of. Again, we've taken it short mostly. 28 up to 31, so it's basically bouncing, but that's a pretty significant gap higher. So we'll keep an eye on that. That'll be my third choice. And then BGNE is the one we saw this morning off of 5,000 shares, so not enough for us to take that. On the short side, we're going to check out Snow. Again, this is the Snowflake. It is not gapping down at all, so never mind there. ONEW, 39,000, a bit light. 22 down to 20. I like that. It's a stock offering. I don't care for that at 20. So it's kind of right at its price. So really nothing there either. And beyond, BYND, down 4%. Let's check this out. Downgrades on sluggish fundamentals. Stocks outperformance, okay, above and beyond what is rational. Price target of 122. All right, we can take a look at this on the short side. I'm not excited about shorting Beyond Meat, but let's back this out and see how high it's been. Yeah, it's kind of in the nosebleed section here, 157 down to 150. So it's sitting right here this morning. That could have room. That'll be our number one short so far, unless we find one off the tabs here. All right, 3 minutes to go. Let's look at some other names. Kodak Long, again, they were cleared of all wrongdoing. So we can take a look at that. Apple up a little, I like that. BGNE is the one we're going to talk about that. I've got, why did I cross that out? Oh, low volume, that's it. Tesla gapping up 5%. We're going to touch that. Amazon, plenty of volume. Let's look at the decliner, see if we can find something. Volume, all right. Beyond Meat and FSLY, Fastly. See if there's a headline associated with FSLY. No headlines. It is gapping down. Look at that resistance of 79. Well, if it would fall past 76, but that'd be tough to take. We'll keep it on the short list. All right, so here's how I'm going to set up our board. If you want to set up your tickers, Play will be the number one long. AGEN will be the number 2, with NNOX being number 3. But I'm going to set up Play, AGEN, and then Beyond as far as our 3 screens. Not in love with any of these, so you know, this may be a day we don't pull the trigger on anything. Fake meat, yeah, beyond rational, I hear you. All right. Beyond on the left, we talked about AGEN. In the middle, yep. Typing error, AGEN. Again, these are both longs. Don't like that action going into the open. And then the short, BYND, will be off on the right-hand screen. Kind of like that setup. All right, for our, not liking that AGEN, let's check out NNOX. That's quite the move up. I'm looking at one more KODK. Yeah, let's go with AGEN. Nope, NNOX. Sorry for hopping all over. I want to get one I like here for the middle. All right, 30 seconds to the open. Welcome to the play of the day. We have SPY showing on the left here. This is so we can see what the overall market's doing. We have Beyond Meat on this left screen. This is a long. We're going to need at least $1 stop, so stand by on taking this long. What is going on? This is supposed to be play. There, that's better. All right, welcome to play of the day. We have the SPY on the left, dropping there as we go into the open. We have play going long. It's going to need a couple $1 stop there. NNOX, we're looking long, and then Beyond Meat is looking short over here at the right. All right, there is the open. We'll get zoomed in here. Market futures are in the green. You can see up here as 0.21%. Play is already gapping up out of our normal range, that 5-10% higher. So we'll look for a setup here. It would have to come in some before we take that. NNOX, goodness, this is supposed to be a long, and it is certainly selling off. And then again, Beyond's supposed to be a short. So really, everything's working in reverse here for these two on this side. That's kind of crazy. Look at this, $31 down to 30. Still in the 5 to 10% window though. That's a little too much of a move down for me to be able to take. And then Beyond, that's a lot of short covering here, if that's what that was. So 150 up to all the way up to 153. So almost a $3 move. So if we see this starting to milk back down here, I'll take it short. This is 150 down here. Again, this will be a short and beyond meat. It's at that 3, almost 4%. Look like the market's in the red, so I like the short. Let's take it at 150.40. You're going to need a $1.50 stop. Let's go a dollar stop. Dollar stop beyond meat short. I'm going to move this higher if I can. Okay, hold it. We're looking at 150.40 entry. Okay, 150.60 is the new entry. Again, we're going short on this. We're going with the $1 stop, which is kind of tight. There it is. There's our entry at 150.60. So 160.60. What? 151.60. Can't do math this morning. Here is our upper stop. So get that in first because this one's moving around. Again, we're taking this short. So here's your arrow so you don't get confused on what we're doing. And again, looking for that 3R move, the $3 $3 down basically. So 149.61 would be our first R, and we're back out of the trade. So minus 1 R there did not work. If we would have put the stop up here, we'd still be in, but then again, it makes it that much harder to get down to the level. So we'll see if this continues on to work there. And if so, then the debrief will be that the stop was too close. All right, let's take a look at some other names. Play, a lot of strength in that name, kind of surprised. Some other names out there, TGB. TGB. Up 2%, not a lot of movement in that. Vale, that's Brazilian oil firm. A little bit of move up there. Boy, it's Beyond Meat's flopping around big time. All right, Mark, another name on the long list. Yep, up 8%. That would have worked. It's pretty light though. That's why I don't like these dollar ones. All right, let's see. AGEN. That's the one we had pulled up in the middle. Came down here, nice triple bottom there at 532. So when you get that triple bottoms, you put a higher, you put a stop up here at like 55.42 and take it long, and then you have a 10-cent stop. So we're not going to do that. We'll just do the one trade today, and we're done with it. These big, nice dojis, though, do make it look like the stock's eventually going to turn around and go south there. So we'll see. We'll leave that in there. All right, let's see. Other names. Kodak Long, KODK. It was up 10%. It is no longer up 10%. So dropped about 60 cents, 70 cents or so. All right, and FSLY was the other one. This was a short now, switching to the shorts. That one filled the gap. So boy, nothing really working for our setups this morning. Again, we'll keep Beyond Meat on the right-hand side over here. Tesla was up 5%. See if Tesla would have worked long. It's basically sitting where it was. And you're looking at about a $10 stop if you get into something like that. Okay, we'll give up on the short day trading stuff. Let's look at the chart and see what's moving up. Let's go to, this is our 5-day. On the SPY, you're looking at there. All right, Tesla up 5%. Luckin up 2.6%. Sony, PlayStation 5, a lot of news coming out about PlayStation 5. I want to say November, early November. I want to say November 3rd or 11th. Can't remember. But PlayStation 5, I think that's going to scream off the shelf. You know, everybody's at home all the time now. I think the PlayStation 5, as well as the new, I think Nintendo's got a new machine coming out. They're priced at $500, which it's a kind of a high price point. But if you have kids that's around this age, it's kind of a must-have sort of thing. So we'll see. Neo up, Workhorse up, Shell up. So those are all our EV names. GoDaddy is up. Been beaten up a little bit lately. LCA is up. The long-term gambling names have done well recently. All right, a lot of green there. So let's take a look at the red names. WP Carey, that's a real estate investment trust of mall-related things. So it's, if you think value investing, another way to hop into it is through real estate. Delta Airlines, Chevron, Home Depot, Northwest Bio, Lowe's, Canopy Growth. O increased its dividend. They're called the monthly dividend company, and they've increased their dividend for like 30 some years. So O is a place that is going to start creeping back in your portfolios. Another great place with very little downside to be able to put money away. All right, so not a whole lot of names in the red. The Dow's in the red by 0.17%, NASDAQ 0.3% in the green, and then the SPY's about even, exactly even. Right now. So where is it? There's the SPY number up there on the right. All right, let's talk about some question of the day. Value versus, get on the right screen here, sharing this out to you. Value investing versus growth investing. Now I'll let you go for the day. All right, value investing. Picking stocks that appear less than their intrinsic value or book value. So again, when you think of I don't think I've ever seen a toilet commercial before. That's interesting. When you think of how do you value a stock, traditionally it's off of book value. As if you sold off all the assets, what would the stock be worth, right? So if you have more assets than the stock's worth, then it would be, if you sold off all the assets and that comes out to $7 a share, that's the book value. Sometimes things can actually trade below book. If it's going out of business, that's when things can get to below book, thinking that liquidation is not actually going to happen. Those are not really, I call that dumpster diving. Other people call it value investing. It's not really my thing. I'm looking for best of breed, strong and getting stronger kind of a theory. But when you look at value investing and traditional price to earnings ratios, again, you're looking for anything below about 15 is undervalued generally. Micron kind of defies everything here. Micron's been sitting at like a 4 to 6 PE forever, and even when it goes up 50%, it's still not moving up to where a traditional valuation would be. So it's kind of a undervalued forever sort of thing. If you look at IBM, undervalued. ExxonMobil, undervalued. Again, for what's the value for the actual company. The problem with those like an IBM or an Exxon is nobody wants the stock. So if people don't want the stock, it's not going to really scream higher. So a lot of times if you go into a stock screener, which is what people used to talk about back in the day, is I want to, I want a PE below 15 and I want a market cap between this range and, whatever you put in there, then it generally gives you a bunch of stocks that nobody wants, right? Nobody wants them for a reason. So that's why I don't use all the screeners there. A Printer's comment here, if you're watching on replay, is don't growth stocks eventually become value stocks? Yeah, IBM was a big growth stock, using his example. I would agree with that. I would not say all. Is Apple a value stock? Apple's been around for decades now, so what, 4 decades plus? It's still growth. I think it really depends on, here's what I would say, is a company, and when it transitions to this, is when I look to start selling it, is when it actually starts a dividend and then starts increasing its dividend. Because what does a dividend say about a company? So if all of us in the room right now are sitting around a boardroom and we decide what to do with our extra capital, we're making a bunch of money, what do we do with it? We can put it into research and development and continue to increase our goods and services we provide to make more money. Or, I don't know, I guess we're out of ideas. Let's issue a dividend to stockholders. And that's what Warren Buffett said for years, and that's why he hated dividends, because it is literally the management team giving up on the company. Now, they'll say, yes, we're rewarding our shareholders, and yes, they all stand to benefit from receiving a dividend. But what the percent or 2 or 3 or 4 you get from the dividend pales in comparison to, I don't know, putting your money to work into new goods and services that makes your stock price double. So I would take the double over, hey, let's just pay ourselves 2, 3, 4%. So literally it's a return of capital to shareholders, meaning we don't have, when you think of the use of capital, it means we don't have any more good ideas. So that's when your growth stock becomes a value stock. Does it happen overnight? No, but I would think differently of Facebook. If Facebook issued a dividend, that's a sell. For what? That is not the ball game they're in. So if they're going to get into, hey, let's turn into old lethargic tech and issue a dividend, it's like that doesn't even make sense. If Amazon issued a dividend, I would see them doing it for exactly one reason, and that's to stay, how to put this politically, how to stay the monopoly, how to continue to operate as a monopoly in a capitalistic society, right? Amazon is a complete monopoly. I mean, you can't say it's not. Congress is onto this, and eventually they'll be called on the carpet, and Amazon will have to split up. There's no way Amazon Web Services and Amazon Delivery should be the same company. It's like split that stuff up. But it'll happen eventually. But if they issued a dividend, that could put everybody, maybe get another good 5 to 10 years run of being the monopoly that they are. So I don't know. Jeff Bezos isn't dumb, and I'm sure his team, they aren't dumb either. So if they issued a dividend, I wouldn't be as concerned as if Facebook just up and issued a dividend. It's like, what? Why? Apple issues a very small dividend. I don't worry about it. If they were to start increasing their dividend every quarter, I would be like, what? That doesn't seem right to me. So again, I've got too much cash and I don't know where to spend it. So what are other uses of capital? Kind of getting away from our topic. But instead of issuing a dividend, why don't you buy back the darn stock? And that's what Apple does, is they, for years they would issue these large buybacks. And when you think of, when we talked about this as a topic of the day, I don't know, about a week ago, and have a podcast episode on it, stock issuance versus stock buybacks. But when you buy back your stock, you're retiring that stock. So if there's 10 pieces in the pie and you retire one of them, then there's 9 pieces. Well, each piece of those 9 is a bigger piece of the pie, right? And when you're talking millions of shares, it seems small, but it's the exact same principle. The opposite is when you decide to issue more shares. You're intentionally devaluing your own stock, i.e. being greedy. And that's what Tesla did the other day, and people cared about it for about a week, and now they don't. They're buying hand over fist again. But so anyhow, got off a little bit of a tangent there. So here you see the big names: Warren Buffett, Benjamin Graham, Charlie Munger. This was everything to these guys. Now, this was also, and Warren Buffett admits, he goes, he couldn't have become a billionaire using the same strategy today that he did then. Because back then you had to go, get out of bed, climb into the car, drive to the library, look up the value line subscription that library had, and read days old information on making your decisions. It's not instant like it is now, where literally algorithms are set up to where, I don't do this personally, but I know many of the quants do, to where it can read a headline and the computer immediately can analyze it and make trades based off of it. I mean, that's instant. Really, is value investing dead? You hear that sometimes. It has been dead for about 15 years. If you invest, if I ever get into this, if I go into investments, like I bought ExxonMobil, shame on me, but I bought ExxonMobil thinking it was grossly undervalued. And it got up to, I don't know, I made 20-25% on it. I should have sold it then, right? But the problem with, you buy a best of breed name and you're trying to hold it for a long time because you want this hundreds, if not thousands of percent of return, to where if I buy something for value and it moves up, 10%, I'm already looking to sell it. It's like, that's just taking way too much of my time to try to find something that I can get 10% out of and sell it. I want to, comb through the volumes of research that's out there to try to find the next name that has that thousands of percent upgrade on it. So, yeah. Predator, you throw DKNG and Nikola out there, and I will say apples and oranges, my friend. Nikola, I would not touch. DraftKings, I wouldn't buy here, but they certainly have big plans. I think there's a lot more legitimate business model with DraftKings versus Nikola that is yet to make a vehicle. Yeah, I agree with you. They sold extra shares. So that's true. They devalued their own stock, and folks will do that during the growth phase. I don't like it, but yes, you're right. Good point. Okay. So value investors actually ferret out stocks that they think the stock market is underestimating. Let's go right to growth. And we can go right to the key takeaways. So growing it at above average rate. So what do I look for? I say it all the time. I'm looking for best of breed with a moat. I'm looking for a high margin, highly addictive product or service. So, you know, the Disney has a moat. You can't just put theme parks everywhere and hop in to be a challenge, right? So Amazon, they're just a monopoly. I mean, there's just no way you'd want to, like, hey, let's all get together and put some money and start a home delivery business. What? You'd be crushed. So there's names you just would stay out of. A highly addictive service or product, all the Apple stuff. And of course, you know, they have the new Apple subscription now, which I haven't delved into. I need to get into that, but because I'm probably paying for all those things separately. But when you look at Amazon Web Services or Apple subscriptions or Netflix, you know what? Well, if you're a Netflix subscriber, you probably will pay Netflix until you die, right? Because who cares? It's $15 a month, or I don't even know what it is. But, you know, it literally falls into the who cares bin. And whether you're watching it or not, you're just going to sit there and pay it forever. That is the kind of company you're looking at to be a shareholder. And again, these are, you know, growing and growing even more. Young companies poised to expand, or even big companies poised to expand. So there's some different evaluating stocks. You almost can't evaluate the stock. I mean, you almost can't. Like people that buy Tesla shares here with a 2,000 PE, I have no idea what they think is going to happen. That's going to end well. But as long as, you know, none of us is as dumb as all of us. So if everybody's dumb enough to believe in these shares are going to go higher, then they'll go higher. So, all right, Netflix, $13.90 a month includes tax. Maybe, I don't know. I had to redo my Hulu last night so I could watch a movie with Irene. So, and it's one of those, I don't know, I'm probably subscribed to all of them, but we'll see. All right, but those companies print money. So, all right, that's all I've got for you today. Thank you so much for listening in. Markets are in the red across the board. So I'm negative on the overall market sentiment going into the election. So we shall see. All right, have a good one and have a great weekend. And we will see you back on Monday. Thank you much. Bye.